We're going to get started with what is my favorite time of the conference, and that's sort of our alliance section, our editors panels, where we bring our best and brightest to talk directly to you about what they're looking at and what they're thinking. It's been quite a year. There's not a general consensus about the market these days. There's definitely not a general consensus amongst our editors. And I just wanted to get them. Again, I love having conversations with these guys. I wanted to sit them down, go through the hot topics of the day, and see what they think. So we brought together what we call our macro level services, our editors, some of our more outspoken and colorful personalities to go through some topics, and we'll see what we think. I promise I'm not going to try to agitate them or get Matt talking about gold or anything like that, but we'll see what we can do. There is a clicker somewhere. I should have grabbed that. So this is called Bull, Bear, or BS. And I am going to deliver a fact or opinion, not necessarily one of mine, but to these gentlemen. And we're going to let them decide if that makes them bullish, bearish, or they can call BS on that particular fact. I don't think I have to introduce anybody, but of course we've got Matt McCall of the McCall Report, Dan Ferris of Extreme Value, and potentially some other things. I don't want to tip that at this point. Doc Eifrig of Retirement Millionaire and many other services, and Eric Wade of Crypto Capital, Crypto Cashflow, Stansberry Innovations Report. You know all that. Okay.
Can I add something?
Yes.
Thank you. So we have not rehearsed this at all. So the idea was truly Matt's going to throw some stuff at us. I mean, he sort of told us what he might throw at us, but we don't know if that's going to be true either. Mm-hmm. So we've not talked, we've not discussed this. This is as candid and open as it gets. So here we go.
Yeah. So you're our beta tester.
And we want your help as well, too, if you have thoughts or questions. So, yeah.
And we've got about 10 topics here, and my only concern is that we're going to start with the first one, and we'll never move on from that. So we'll see how it goes.
We haven't rehearsed, but you know what
Start with the last one.
Right?
It's your paper. You wrote it.
Okay.
Well, so wait a second.
Yes.
Are you in charge?
I don't think anyone's in charge of this.
Okay. Because you could corral it and move it along to
I
number
will try.
2.
I will try.
Okay,
But
right,
I don't want to, if it's going well, we can talk about the first topic all day. That's fine with me. Okay. So, number 1 here. Legendary investor Stanley Druckenmiller has pointed out that inflation has never been tamed without raising the federal funds rate above the rate of inflation. If that relationship holds, the Federal Reserve will have to hike rates to 8% from the current level of 3.25%. When you hear that, does that make you bullish, bearish, or is that BS?
That's complete BS.
All right.
Well, first of all, the CPI, I believe...
Excuse me, I just want to pay attention.
The CPI has peaked. We have commodity prices rolling over. But the key is the canary in the coal mine...
Can I say that's bullshit at this point?
No.
Sorry.
Is shelter makes up 1/3 of the CPI. Housing and rents. Both are starting to roll over, and they're going to come down very, very fast. When that happens, it's going to go directly into the CPI. And you realize if the CPI is just flat month over month, going forward starting in October, by April, the CPI is down at 2.6, by May, 1.5. Even if it goes up 0.3% month over month, which it's below the average the last 3 months of that happening, by June, we're down to 2.9, which the Fed and all of us would be so happy about. So to me, within the next 6-8 months or so, worst case scenario, inflation is almost back to where the Fed thinks it's going to be. So that's complete BS.
All right. Anyone else?
That's a real nice story, Matt.
Can I still say bullshit?
You won't catch me trying to predict it, but you can't predict what the supply is going to be. Like, all we know right now is that the Federal Reserve is beating the daylights out of the demand side, and that they're not showing any signs of letting up. There's one little green shoot. Lael Brainerd is kind of tossing out. She's the dove in the Fed, just tossing out a comment that suggests maybe she might like to see him slow down a little bit, but I don't think he is. I think he's. I think they're using the SUMA models, right? Something out of my ass, and they're committed. I think they're committed to like this. We have to beat the CPI down to 2%, and that makes me feel really bearish.
I have a mic. I'm good.
He-
Any thoughts? Okay. I do. Oh, go.
I do. Makes me bullish. Anybody want to know why?
Yeah.
What's the CPI? I mean, the one before the nose job, before the tummy tuck. By the time we're done with this, the CPI is going to be, well, we found this amazing asset that never changes, and we're going to call that inflation. And guess what? It's 2% now. I don't trust any of those numbers anymore. This isn't this time is different. Maybe Stanley's right. I don't know. They're going to cook the books. They're going to change something. We're going to come out of this. Did we have a recession? 2 back-to-back quarters? Well, who do you ask? Right? That's where we're headed. So, yeah, it's bullish. Whatever it's going to take, we're gonna burn our way out of this.
Could you repeat the question?
If the historical relationship holds, the federal funds rate will have to go to 8% to combat inflation.
Yeah, I don't think the Fed knows anything. Anyone who looks at the numbers, they don't get stuff right. They certainly get credit for things that they shouldn't get credit for. It scares me a little bit because this guy, not that you don't travel and not that you're not a learned man, but he's out and about there. And I have a little inkling you might be right, but...
Wait, what?
A little inkling. A little inkling. I don't even know if that's the appropriate use of that word. Carly, is that the appropriate use of inkling? Anyway, and I was telling folks the other day that in my vineyard, we had to pick the Cabernet over 2 days because of labor laws in California now. Can't work more than 8 hours, can't work more than 44 in a week. And so migrant workers who normally come into the United States to help out and do this hard-ass labor work, but they sleep in their cars and they make thousands of dollars a day, are no longer doing that. They're making a couple hundred a day, waiting a day, working 8 hours, they would work 20 hours in a day, sleep in their car at the next vineyard. So all of that, for us, it raised the cost, not of the actual picking, because that's the same amount, but the cost of transport, the trucks, the truck drivers, all those are costs that I'll have to pass on. And I hear from people that the labor side of that is not solved, but it might be if wealth is decreased. So I think bullshit on it targeting 8%. It could go to 15%. And I've lived in those times, but it could also, potentially demand dry up and people, I don't know. I'm more in the...
I find it amazing how you could take any topic, the CPI, and turn it into a pitch for your wine.
I heard that part, and I was wondering, wait, is that a bull, bear, or BS? Yes or no?
I'm sorry, a pitch for my what?
His delicious Dry Creek wine. That was great.
Okay. I'm going to move on to valuation. We're still kind of on the macro chapter here. The Cape-Shiller ratio, which measures the price to earnings over 10 years of earnings, is currently at 27.5. Now, that's down from the recent peak of 37, but it's well above its average of 17 times. When you look at valuation, are you bullish, bearish, or is this BS?
I'll let Dan go first.
So I heard somebody say that the problem with this is that S&P earnings are inflated, so the ratio isn't as high as it looks. But it doesn't matter because that effect averages, it doesn't multiply, it's diluted across all of those companies, right? Because they all do the same things with their accounting. So I remember Arnold Vandenberg telling me many years ago when I visited him in Austin, Texas, and he said, well, sure, but just lop 10 or 15% off all the earnings, and then, the multiple becomes high still historically relative to where it was. So it doesn't matter there. I'm not worried about that. The absolute number, in other words, doesn't mean anything. And at this moment, I don't care about those numbers anymore, actually. Sure, the Cape is now finally down around the level of like 1929 or, so you could, I can sit here and say, oh, it's so high, but I don't care about that. What I care about is something I talked with Austin Root about a few years ago, like when I was bullish, yes, it happens. I was bullish in mid to late 2020, and he was asking me about these numbers, and I said, I don't really care, I just want to be on the other side of what happened in March. I just want to be on the other side of the big negative event. And I don't care about the number anymore. And then, I started to care about the number again because it got higher than it's ever been in history. And now I don't really care about the number anymore. I'm just on the other side of, the biggest financial drinking party in all recorded history, and I'm waiting for the hangover to hit. So.
But if you drink good wine, you don't get a hangover, though, right?
The question was, what did you say? It's bullish. I think this is complete nonsense. Since I remember being on Fox News 15 years ago and everybody would come on, the CAPE ratio. What has the market done in the last 15 years? It's gone up. The CAPE ratio has been high. Goldman Sachs did a study going back to 1881, taking the CAPE ratio. The significance of it, that it goes back to the mean, that it sends a market back to the mean, 26%. Your numbers, guy, for something to be actually significant, it needs to be about 95%. 26% of the time, it actually really works, going back over a century. It's a complete bullshit number. And even Shiller himself comes out and goes against his numbers sometimes. I mean, this is just, it's a headline-grabbing ratio that the bears love to use, and it just hasn't worked. Oh,
It hasn't worked except at the top of every financial mega bubble in history, it was higher than it's ever been. Whatever, okay, fine. And 90% of the time, you don't care about it, though. You only care about it when it's at the highest it's ever been in history.
But you don't know that till it's over.
Exactly. I've said you don't know till it's over like 50 times in the past 2 days. Yeah.
So I remember when I first learned about the CAPE and I thought it was bullshit. So
We're using the term BS, Doc. If you
Oh, sorry.
No, I'm just joking.
I remember the first time I learned about the CAPE ratio and I thought it was BS. It's a statistic. It averages stuff. It smooths stuff. The extremes, I pay attention to those extremes as well. So, clearly it was way, way up in 99, 2000, 2001. And clearly it's gone up fairly high, but it's not, so if you're a technician, you're saying this is a lower high, so it's going to go down. And I think people have anchored to interest rates of being really low, so they've priced assets accordingly. That is, they've priced them very high. So with interest rates higher, and I think probably naturally and rightfully staying higher, that this thing, the way it's structured, will drop. Of course, I want to point to Joel Lippman, and you always have to question earnings about really individual companies. But in general, you could even argue, you could question this ratio because the denominator is kind of a little strange. But yeah, I just, next question.
Yeah, next question. I'm going to pass on that one. I don't have anything to contradict.
Sounds good. Okay, let's
I'd like
move
to.
into technology. Adam Neumann, deposed CEO of WeWork, has a new startup with no operations, which plans to use blockchain to track carbon consumption and pair that with some sort of residential rental property business. And he's raised $350 million from a top VC firm. Does this sort of activity make you bullish, bearish? Or, I mean, this one's kind of BS, but I'll let you decide.
This one just makes me laugh. I mean, who is going to give this joker $350 million? I mean, no, but seriously, it's all buzzwords that he's using there. And, it shows, it actually scares me a bit. And it scares me because it shows that there's still a lot of money sloshing around out there looking at deals that really don't have any backing, like you said. And,
Wait,
and that
so
is a bit.
now you're getting bearish?
Yeah. On Adam Neumann. Yeah. He's also creepy looking. Look at the guy.
I know. That's why I picked that picture.
Yeah, I mean, you'll be surprised to learn that Matt and I agree on a whole bunch of stuff, and this is one of them. But it makes me bearish, like breathing makes me bearish. So, whenever. But yeah, him being able to raise money, to still raise money. And the assets that he's trying to turn into like iPhones are like real estate. I mean, if you can still raise, what is it, 350 million? Yeah, $350 million from Andreessen Horowitz, who I thought were smart, to try to turn this is residential real estate into like something with iPhone-like properties. I mean, it's absurdly bearish to me. Believe me. At the bottom, You won't hear from this guy ever again, and he won't be able to convince anybody to give him a dime. It's ridiculous. It is absurd.
I makes me bearish on everything because sign of a top, easy money, idiocy from people you expect to be smart. But I think what the real loser in all of this is Matt used it, chock full of buzzwords, not wrong. The real loser in this is nobody trusts the carbon market. Nobody. I don't take the politics out of it because I believe, as far as carbon markets go, the reason most of us don't trust the carbon markets is because it got really politicized and it got finger waggy and it got judgy. So we all said, you know what's easier just to say, if you and I trade a carbon credit and then you turn around and you sell it to Matt and you both take credit for it, what? None of us like that kind of business. And now they're saying, I'm gonna wrap some carbon-y, credit-y thing into some real estate-y, I go to work without shoes on-y kind of easy money stuff so that I can get the ESG money. Easy money begets easy money. I hate that. And whether or not carbon problem future caused by me and my lead foot, that doesn't even get solved by this because it stays political. It stays mushy. And that's, I'd like to see a solution to that. I'd like some science I could trust on this. And if you're splashing 350 million show pony dollars at it, you're putting that a decade off.
Right. Actually, we should address the fact that 350 million is 1% of AUM.
Yeah.
They don't care. It goes to zero, and they're like, Adam, who? You know.
Yeah.
I can't add anything.
All right.
I agree.
Cathie Wood of ARK Invest has written an open letter to the Fed warning of a deflationary bust. Bullish, bearish, or BS? Dan, you're already shaking your head.
Oh my God. Cathie Wood, like, I want to like her so much, right? She's a good entrepreneur. She started this thing in 2014, took off, you know, it did great, and she sold us all on disruptive innovation. But, you know, after you're down like 70% or so, you know, you should not be writing letters to the Fed. You got a few other things to do. You have a business to take care of. So it seems to be sort of this thing that happens in the world where somebody gets caught, you know, doing something fraudulent or bad or just poorly, and they're called out on it, and they start pointing fingers and blaming other people. So, you know, that's how it looks to me. It's silly.
Yeah, for me, a letter to the Fed is like a letter to Santa Claus.
That's good.
I mean, I'd send a letter to Santa Claus and say, Eifrig wine, please.
Pitch number 2.
But he answered.
I'll tell you what, I mean, I still like Cathie Wood. I think her long-term thesis of disruptive innovation is great. Would you be surprised I have a picture of her hanging above my bed that I, you know, kind of bow down to every night? No, I don't. I'm joking. Oh, yeah, I'm joking. Yeah, that came out wrong, yeah.
Where have you been the last few years? Oh, my goodness.
Her letter to the Fed, I agree with Doc. It goes nowhere. But the point, I think, what she's trying to get across is that with innovation, prices will come down over time. And, you know, a really simple example is I just bought a 75-inch TV that's this thin, that is amazing, and it was like $800. And thinking about what that TV was years ago, that technology does that bring down the cost of a lot of things. And I think that's what she's getting at, that the innovation that will take place in the next decade plus is going to eventually bring prices down.
All right.
Including the price of everything.
We're going to stay in tech for one more minute here. Mark Zuckerberg envisions over 1 billion people using the metaverse to spend hundreds of dollars on digital goods like clothes for their avatar or things to decorate their virtual conference room. On the metaverse, bullish, bearish, or BS?
Eric?
It's BS. I love the metaverse. I love this, the idea that we can escape. We can't escape, especially if there's anything to do with Meta and Facebook or as part of it. But so boy, what a contradiction there is your escapism, your jump into this ideal world, and I keep talking about the virtual trees, but can you cut them down? Can you use the resources from these virtual trees? That's where my mind is going, is what's going on in there. Sure, sell me a pair of virtual shoes to wear on my virtual avatar so the other virtual people will say, like the shoes. I mean, I had to bring 5 pairs of shoes for this. How many shoes do I need to carry into the virtual metaverse now? Do digital shoes get old? How do I know when it's time to change these virtual shoes, right? And I'll never be able to keep up with Matt. I gave up. You show up and you say, look at this. I caught him eating a donut today. He looks like this and he eats a donut. How does that translate over into the metaverse? Can I eat metaverse donuts and look like Dan? I don't. So yeah, sure. It's all bullshit. At this point, it's all bullshit. It won't be in time. But
There's metaverse real estate too.
I hope to the heavens above that there isn't a billion of us sitting around telling Mark Zuckerberg what waist size we have in the metaverse.
He already knows.
Yeah.
I know. I just hope it doesn't happen.
I don't think it's BS. I honestly don't. And it's not that I'm going to be buying more virtual shoes to keep up with you, but you look at these younger generation and my niece and nephews, and when I woke up in the morning, I got on the bike, I went, I'd be home by dark. These damn kids, they're on their computers all the time. And, we all look for an escape from reality. No matter how good or how bad our lives are, it's a very easy escape from reality for me, for younger people to do this. And boy, oh boy, I'm not backing Zuckerberg. I'm not saying they're going to go through Meta to do this, but I think there's going to be, look at Roblox and some of these games, how many users they have. And, Atari, Dan just mentioned virtual land. Atari bought a huge plot of land in Decentraland. Like they bought a plot of land and I went through it. You could go in there, play games, spend money. And it's pretty amazing. My little niece got me over it last Christmas. She's like, Uncle Matt, can I, use your card here? I'm going to buy this. Shit, she's buying all kinds of stuff on some Roblox. And next thing you know, she's like the best Roblox player because Uncle Matt just bankrolled her. So I do think there's something there. I just don't know what it is.
Can she grow wine on that land? Is there something going with that?
Can you imagine how much weed they're smoking at Atari to be spending money on virtual real estate? They're computer programmers and they're buying virtual real estate. It's like God buying the planet or something. He can make a new one. It's the dumbest thing I've ever seen in my life.
Wait, hold on. No, but there's something there though, right? Will there ever be, are we going wide or deep with this? We don't even know yet. Do we all want to be in the same metaverse? Or can we exclude? Can we self-select? And is someone going to tell us who can join? Right? Because you can just mint another one off in the boondocks, or right. Can you?
What are you drinking over?
I'm wondering if they forgot to give me my mushrooms before we came out. People, grown adults, have the right to spend their money any way they want. Pleasure, there's gambling. You can go to bullfights still. You can do whatever you want to do as adults. I know people that do this. I know 40-year-olds that still play Dungeons and Dragons. So what do you want to do with your life? I'm curious, is anyone in here, or we could have everyone close their eyes, raise your hands. Has anyone in here played or bought stuff in a virtual world like this and would raise their hand and say, besides Eric? Anybody? Couple people? Yeah. Interesting. I think I've never done it, so I don't know if it's an enjoyable, fun experience, but it seems bearish.
One of the most successful entrepreneurs in America over the past 50 years is going public with his fourth and final prediction about a scenario he calls America's Nightmare Winter. You've probably never heard of Bill Bonner, but in addition to owning an interest in businesses all over the globe, He also owns more than 100,000 acres with massive properties in South America, Central America, the US, plus 3 large properties in Europe. Bonner says, we're about to enter a very strange period in America, which could result in the most difficult times we've seen in many, many years. Bonner has made 3 similar predictions in his 50-plus year career, and each one proved to be exactly right, although he was mocked each and every time. That is why I strongly encourage you to read about Bonner's 4th and final prediction, totally free today. It's all spelled out in a free report we've put together about America's nightmare winter scenario. Get the facts for yourself. Go to AmericanWarning2022.com to get your free copy of this report. Even if he's only partially right, it will dramatically affect you and your money. So again, www.AmericanWarning2022.com.
Okay, let's move on to housing. Transactions in home sales have ground, I have to a halt here, that's a little exaggeration, with September sales down 23% over last year. At the same time, we've spent a couple of decades building homes at below the replacement rate that we need. So on housing, bullish, bearish, or BS?
I think in the near term, I'm bearish. I'm looking for a home right now in South Florida, and I see the prices go down, so I wouldn't be buying right now. The problem is, if you're going to be borrowing money to buy that home, we have mortgage rates going through the roof, the highest level in 15 years, 20 years, something like that. So that obviously, I wish I wrote this number down, but like 1 year ago, for an average home, your mortgage payment would have been $1,300, let's say, with 20% down. Now it's like 2.5 times that, with home prices going up and with mortgage rates considered in there as well. So I think we're going to see a major slowdown. I do. And if the Fed is successful in getting more people out of work, obviously it's less people out there. Longer term, though, I will say I remain bullish because there's still that millennial generation that is starting their family formation a little bit later in life. That means you move out of the condo or apartment in New York City or Boston, wherever you live, and you move to the suburbs, you buy a home. So, and inventory still remains very low, historically speaking. So you put those two together, I think long-term we're fine. Short-term, I think we're in for some trouble.
Nothing to add. Spot on.
Yeah, my take on this is the baby boomer, that cohort, the demographic cohort is really, really this large group. Many of them own lots of real estate. Many of them have lots of wealth in this real estate. I personally thought this was going to happen in 09, 010, 11, where high-end real estate was going to plummet. I think that's going to happen now, and I think there's going to be this capitulation because I think those asset prices shot up because money was so cheap. And again, we anchor to the past and anchoring to prices of assets that were related to low interest rates. I think that'll flip-flop, and I think it'll flip-flop fast. So I expect this to plummet. So I'm very, very nervous about that. And I am now, probably for the first time in my life, real estate free, mainly because of that, thinking about interest rates a year ago and inflation. So,
But Doc, are you just worried about the higher end or lower end as well, or the entire housing market?
I mean, I think in the entire, but the high end is inflated off the charts. Anyone go on Zillow and look, I love this, in the town where my winery is in Healdsburg. And this is like a thank you, Matt, for setting this up. Like, this is beautiful. Both Matts. There's like 3-bedroom, 1-bath ranches that were 10 years ago $150,000 and are now listed for $1 million. I mean, that just makes no sense. And then the question is, you have to think about replacement. Could you build a house? Could you buy lumber and labor for $1 million or less than that? And to me, that's a dislocation. There's this cost of supply that hasn't adjusted and may never adjust. And so, to me, if wealth and the feeling of wealth and fear continue, then I think this thing plummets. But again, I look at these places and I just like, wow, who wants to own that for like $1 million is a lot of money. So I'm bearish.
I'm bearish just because of a return to the mean that what was it, 12 months ago, you list the 3-bedroom, 1-bath ranch, and as you're pushing the sign into the yard, you're telling people, well, do you want to get on the list of 50 people that are going to make an offer this afternoon, et cetera? Love realtors, love real estate. A lot of them are selling it out of their vest pocket before it ever gets listed. That's not the real world, right? Real estate is not supposed to transact instantaneously. We have blockchain for that. But we got to pay the piper on that, whether it's interest rates, whether it's population demographics changes. We got to pay the piper on that. We were selling it way too fast. I grew up in a time that if your house sells in a month, you underpriced it. When do we get back to that? If your house sells in 6 months, you priced it right, was a thing. We may never get back to that because the dollars are different. There's so many sloshing around. And I say all of this knowing full well that in 12 hours, I'm going to drive by, anecdote, sample size N1, houses can't be made fast enough in Central California, that they're still cranking them out and selling them for these ridiculous prices that apparently they didn't get the message that this entire housing industry is slowing down. There's houses being built like crazy and bought before they're done. So is this when a cruise ship crashes, it takes a long time for the crash? I'm not confident, personally. I'm not confident that we're going to get through this unscratched, like I think a lot of people are.
Okay, so let's talk about those consumers. According to Deloitte, surveys from Deloitte, consumer fears surrounding inflation are now falling, and the number of Americans concerned about their level of savings fell from a high of 62% to 49%. Now, that's happened despite the ending of government stimulus programs and fears of a recession in the financial sector. So despite all this, consumers still appear very happy to spend. Does this make you bullish, bearish, or is that BS?
It confuses me because it really goes in the face of every other kind of retail consumer number out there. You know, the retail investor numbers, it shows the AAII we've all talked about for the last 3 days, how negative people are. So that kind of doesn't make any sense to me. I don't understand how that is. Maybe we're getting to the holiday season. I will say, though, there's something about retail therapy. I love spending money on like shoes and suits and things like that and Doc's wine. I mean, I really do. It is honestly a great wine. It is. I get 50% off for saying all this.
I'm sorry,
stuff,
you said Doc's what?
Yeah.
Does he have a website?
But no, seriously, there's something about Americans. The savings rate has come way down. And the fact that they're not concerned about that, Matt, concerns me. Mm-hmm. It really does. You know, with the savings rate coming down, you should be the exact opposite. And with the holidays coming up, obviously, and that's a huge time to be spending. And I think we will probably see retail sales at the highest level ever, above last year. And whether that's smart or not, I think we will see that. So I think as far as investing is concerned, let's bring it back to the stock market. I think there's a lot of great retailers out there right now that have gotten beaten down that I think are good long-term buys.
I agree with some of that. So you got to pair this up with the depletion of savings and the rising credit card debt, right? People actually got to be pretty good savers, and then now they're depleting it back down to, near, not record lows, but down really low, and they're putting more on credit cards. So there's legs under that. You know, there's spending to come from that, but, eventually that doesn't work out well. So.
I don't know if I have anything to add to that.
Yeah, this number for me is confusing. Denominator, has that changed in 3 years at all?
This is just trillions of dollars personal consumption expenditure.
Yeah, but I'm just thinking the size of the economy in total. So is it as a percentage of that a different shape, flat, low? The depletion savings, I like that. Yeah, This is an uninteresting chart for me.
But if you take the COVID spike down, right?
Let's
Taking
look at that
COVID
chart,
spike
though.
down, it really goes straight up. I mean, it's in a really nice pattern. And, but if you could probably go back 20 years, it's the same trend, I assume, Matt, right? Like
Yeah.
you're gonna spending continues to go up as the economy grows. I see what you're saying there, Doc. So percentage-wise, is it basically staying the same?
Yeah.
But what's the number on there from 12 to, it looks like 17 and a half, $5.5 trillion. Does anybody remember anything happening recently where 5.5 to 6
That's a familiar number.
trillions of dollars sent?
5.5.
Did Grandma send that to us in a birthday card or something?
Yeah, 5.5. Let's see.
Just keep doing that, Grandma.
Oh yeah,
Grandma.
they printed $5.5 trillion.
Yeah. Something like that. Yeah. We'll be all right. This time is different.
On energy, a very big topic this year. Since the start of the year, oil prices have gone from around $75 per barrel to $110 immediately after the Russian invasion of Ukraine. Now they're around $90. But oil production has only risen in North America about 6%. And at the same time, electric vehicle sales made up about 6% of vehicle sales this year. So energy, bullish, bearish, or BS?
I'm now bullish, and I'll admit I was wrong. I'm late to the game here. I started buying energy stocks for myself maybe 4 months ago when they were pulling back a little bit, and I had to rethink my outlook for energy because I believe in renewable energy and I believe in EVs. I think it's one of the greatest investments of this decade going forward. They're just not coming out as quickly as we thought. The Ukraine conflict shows us that we still rely very heavily on fossil fuels, and that transition into EVs and renewable energy is going to take a very long time. What's solar? 3.2% of our energy right now? I mean, it's going to take a long time to get off that. So I like to take the barbell approach. I want to still invest in EVs and batteries. And on the other side, I want to invest in oil companies too. What are you looking at me like that for?
I'm listening.
Oh. He's going to say something the way he's looking at me. The barbell approach. So I like to invest in both sides.
I like that, the barbell. I know I do. Yeah.
Can I say something ridiculous?
Yeah.
Aside from the fact that our strategic petroleum reserves are being depleted, I don't like to see that, just strategically. If you think, let's say you've got a 50 to 100 year time zone, and somebody out there must, burning everybody else's oil is a genius move because we will have, at this rate, we'll have the last drop here. I don't know how to monetize that yet. If I figure it out, you guys are going to get all kinds of emails about it. But if we can burn, and we're not going to stop burning and spending oil, right? But if you think further than this winter, if you think kids, I sure hope we have the last 100 million, trillion, whatever barrels. Let's burn everybody else's oil. And let's pay for it with these cheap dollars that, I know dollars looks great, right? The dollar's going crazy, looks great, but dollars now are worth less than they ever were, and they're right? Take these dollars, let me spend your oil, and I'll keep my oil. If this was an inventory issue, we're doing it right. We're keeping our inventory, and everybody else will come to us later and say, ooh, shoot, can we have some of that oil we sold you back? I don't like the way it looks or sounds or feels when I turn on the TV, but yeah, let's keep our oil. 100 years from now, we'll be glad we did. And yes, that was ridiculous.
No, that's brilliant. Seriously, that's a fantastic insight. Wow. I'm now bullish.
Okay, let's move on to a crypto question. Through its 15-year life, the Bitcoin community has offered shifting narratives for its purpose, from internet money for transactions to digital gold to uncorrelated asset. However, its recent pitch as a safe haven protected from Fed meddling has faltered, and Bitcoin has behaved more like a tech stock in the last couple of years. On Bitcoin, does this make you bullish, bearish, or is Bitcoin BS? I think so.
Bullish. If 10 times your money in 42 months is bullish, I'm bullish. That's the path we're on, I think. And it's it's all of the above. Bitcoin is and always has been all of the above. It's a funhouse mirror. You see what you're looking for in it. During COVID, Bitcoin mimicked the healthcare stocks that were getting tons and tons of money. Is Bitcoin a healthcare stock? Absolutely not. But it mimicked it. Bitcoin is a meme zeitgeist generator because it doesn't have a personality of its own. It takes on did I just describe tofu? Takes on the characteristics of the meal you put it in. Bitcoin is rock hard tofu.
So it's very clear early on in my life that if you surround yourself with really bright people and they like you and they'll work for you, with you, you'll look really, really successful. On this topic, people know I don't know stuff at all about this, which is why we hired this guy. So I defer on Bitcoin to what he said.
I'm going to chime in a little bit. Bitcoin, I just did his research right now. It says the volatility of Bitcoin's fall is now less than the NASDAQ and the S&P for the first time, this was yesterday, since 2020. So the volatility, if you look at the volatility recently, it is really low. And to me, that's bullish long-term, building a base. I think it is digital gold. That's how I lean to it. I don't look at it as a payment process or anything like that, or a new currency coming in. I truly believe that it will take place, the place of gold over time. What 20-year-old wakes up and says, oh, I can't wait to buy some gold? Most of you know me by now, and I think gold is the stupidest investment ever. And I know probably 80% of you own it, and you're probably thinking, Matt, you're an idiot, and I could be. But it does, and I know Dan's gonna be like, well, for 5,000 years, well, if I could live 5,000 years, then yeah, sure.
It's not going to stop being true, though. It's 5,000 years and growing.
I'm not gonna live 5,000 years, unfortunately. But I think I still own all my Bitcoin, have not sold. I will say I haven't opened the account for like 8 months, so I'm not quite sure where it's at. But I still believe in it long term as an asset class at some point, and it will decorrelate, in my opinion. And Eric may want to comment on it, decorrelate from the NASDAQ and the risk-on assets. And when it does, it'd be even more attractive to me.
It already did. It hit that June 16 bottom, and it hasn't violated it, whereas stocks and bonds and everything have. So, and I saw these stories about the volatility falling. I mean, something that goes from, like 3 to 69 to 17 is volatile, okay? That's, this is like a near-term recent phenomenon. It's the most volatile, crazy thing in the world. But I think it's neat, and I hope it works, because it's completely outside of the banking system. I hope it stays there. I hope it really works one day.
All right. Well, thank you guys for coming. It's been a joy. Yeah.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.